Ever walk into like a Costco and just get that feeling, like this is my place?
Totally. But some people get that same feeling at Walmart, right? Like we all have our shopping personalities.
Absolutely. And it got me thinking, it's not just about the stuff, right? It's like this whole vibe. Like, do you want the rock bottom price? Or is it more about the experience, the service?
That's that value proposition, yeah.
Exactly. And you know what? That same like dynamic, it totally plays out in the world of equipment financing.
Which is what we're diving into today. The two main models in equipment financing, kind of like the Walmart and Costco approaches, if you will.
Okay, I'm intrigued. Lay it on me.
So picture this. You need a new piece of machinery, right? Big investment. One approach is laser focused on getting you the absolute lowest interest rate, like rock bottom. That's our efficiency model.
Okay, so far so good. Sounds like my kind of place, but there's got to be a catch.
Well, think of it like this. To get those crazy low rates, everything's got to be streamlined. Automation, minimal overhead, you know the drill. They pass those savings on to you.
Makes sense. But what happens when something goes wrong? I'm imagining myself like desperately trying to reset a password on some clunky online portal at 3 a.m.
You're not wrong to be concerned about that. The efficiency model hinges on, well, efficiency. Online applications, quick approvals, not a lot of hand-holding.
So if I'm the type who likes to pick up the phone and yell at a human when something goes haywire,
you might want to factor that in. If everything goes smoothly, it's a breeze. But any hiccups, and you're often on your own.
okay, so maybe not for everyone then. So what's the alternative? What's the Costco of equipment financing look like?
That's where the relationship model comes in. It's less about the transaction and more about building, well, a relationship.
Okay, I'm listening. Tell me more about this relationship model. How's it work?
So these companies, they're invested in you for the long haul. You're more likely to have a dedicated rep who gets to know your business, anticipates your needs.
So less about algorithms, more about actual humans.
Yeah, exactly.
It's almost like, when you find a good mechanic, you trust them, even if they charge a bit more, right?
Yeah.
Because they're not going to steer you wrong.
It's about trust, absolutely. And, studies have shown that the relationship model often sees lower default rates.
Interesting. Why do you think that is?
Well, because these companies are right there with you, especially if times get tough. They're more likely to restructure payments, be flexible. Things are purely transactional model. They might not even consider that.
Makes sense. Okay, so here's my cynical side coming out, is this high-touch service, right? Is that just a fancy way of saying, hey, we're going to charge you higher interest? Like, are they slipping in hidden fees because they know you're not really paying attention to the fine print?
I can see where you're coming from. And yeah, there can be a premium with the relationship model for sure. But it's not always about sneaky fees. It's more like they're investing more upfront in you, in understanding your business, taking on more risk potentially.
So it's not just about the numbers on a spreadsheet. It's about really getting to know the client, their potential.
Exactly. They're betting on your success long term.
Okay, so it's less about the quick win, more about building something sustainable.
Right. And for a lot of businesses, that kind of support, that's huge. It's like having a, financial advisor on your team who's been there, done that.
Knows the ropes. Okay, this is all great, but let's get practical. How does this actually help someone listening right now choose the right model for their business? What questions should they be asking themselves? Give me the goods.
First things first. How comfortable are you dealing with all the, the nitty-gritty of financing on your own? Or do you want someone in your corner guiding you through, even if it costs a bit more?
So, classic trade-off, time versus money.
Often, yeah. And it's not just about personality, right? It's about the business itself. Like, if you're financing something simple, straightforward payment terms, efficiency model might be perfect.
But what if it's like, a totally custom peel of equipment? And the payment stuff, it's kind of complicated.
That's where the relationship model really shines. Because they've taken the time to understand your business, right? They're better equipped to handle the curveballs. It's not just about that first deal. They're with you for the long haul.
Okay, so if I know things might get a little messy on my end, maybe better to have someone in my corner to, untangle it all.
Exactly. Plus, think about the peace of mind. Knowing you've got an expert on call, that's huge for some folks.
It's like having that friend who's like a whiz with their taxes, every year. You're like, please, just tell me what to do.
Exactly. And here's another thing to consider, like your risk tolerance, the efficiency model. It often leans heavily on algorithms, automated assessments.
Yeah, which can be great, but...
Yeah, right. Great for speed, but they don't always get the full picture, especially if your business has, unique circumstances.
It's like trying to explain a complicated situation to one of those, what are they called, chat bots. And it's like, nope, you're not getting it.
Exactly.
Yeah.
A human underwriter, someone actually looking at your business, your potential, they can see those nuances, the things an algorithm might miss.
So it's not as simple as just like cheap versus expensive. It's more nuanced than that.
Right. It's about you, your risk tolerance, how much expertise you need, how complex the financing is.
So much to think about. But that's why we do this, right? Help folks make sense of it all.
Absolutely.
Right.
At the end of the day, the best model, the one that fits you best.
Beautifully said. So if you only remember one thing from today's deep dive, let it be this. When it comes to equipment financing, one size does not fit all. Figure out what you need, do your homework, don't be afraid to ask questions.
There's a solution out there for everyone. Whether you're team efficiency or team relationship, you can find the financing that helps you thrive.
Couldn't have said it better myself. Big thanks to our expert for breaking it all down. And to our listeners, thanks for diving in with us. Until next time, this has been The Deep Dive.